Hello investors and future investors, welcome to the channel. For today's video, I want to send a message out amidst of all this market panic and decline. This message is specifically for you, new investors that are trying to make money with the stock market and more specifically with options trading. If you're here today, chances are you've been watching the markets and feeling a little bit anxious, red everywhere. Headlines screaming recession, social media blowing up with panic. But before you make any hasty decisions, I need you to take a breath. This is your message to stay calm because this, right now, is just a phase. And I promise this too shall pass. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. Let's talk about what's really going on and why you need to stay strong. This video will be a bit different format than the usual because I want to set the foundation for trading this type of volatility. Markets will decline. And in fact, market declines are as old as the market itself. Just take a look at history. The dot-com bust in 2000, the financial crisis in 2008, and most recently, the COVID crash in 2020. Each of these events saw major drops in the market, and in each case, investors who panicked lost. But those who held on, who didn't let fear win, they came out stronger on the other side. Market moves in cycles: growth, decline, recovery, then repeat. And right now, we're just in one of those natural downturns. It's painful, sure. My portfolio is down more than 50%, but it's not the end. It's part of the journey. I'm still selling options and making consistent income. Think of this market like the seasons. Winter always feels endless, cold and dark. But no matter how bad it gets, spring always comes. The market is no different. And as sure as the sun will shine, the market will rise again. The biggest danger in times like this isn't the market of itself. It's you, yes, and more accurately, your emotions. When fear takes over, logic gets thrown out of the window, and that is when mistakes happen. Fear sells. The media knows this. Panic gets clicks, but smart investing, it requires a cool head. Because when you sell during the dip, you lock in losses. You turn temporary paper losses into permanent ones. The truth is, most of the market's best days come right after the worst ones. If you're out of the market, you miss that bounce, and that bounce is what builds wealth. Let me ask you, when you bought your investment, your stocks, your ETFs, your index funds, did you do it because you believed in the long-term growth of the economy, or just to make a quick buck? Let me know in the comments below. While you're answering that question, if you're in need of help to grow a small options portfolio, then look no further. On this channel, we specialize in income options generating strategies that help you grow your portfolio consistently over time. I've been trading for more than 5 years, and I will not promise that you will get rich overnight. That's not how it works. But if you're willing to learn these strategies and stay consistent, then you should check out the link in the description below and sign up for my one-on-one coaching to take your account to the next level. Now, for those of you that answered that you're in the market for the long term, then why are you trying to time the short term? Legendary investors like Warren Buffett, Ray Dalio, and one of my favorite investors of all time, Peter Lynch, they all lived through countless market crashes. And what's their advice every single time? Be fearful when others are greedy, and greedy when others are fearful. They understand that volatility is the price of admission for long-term gains. The most successful investors use downturns as buying opportunities, not selling sprees. They don't panic, they plan. If the greats aren't panicking, then why are you? They've seen this movie before and they know how it ends. Spoiler alert, it's not a crash forever, it's a recovery followed by growth. The market is declining. But why? Rising interest rates, inflation pressure, global tensions, corporate earnings, slowdown, and most recently, trade tariffs. Each of these factors contributes to volatility, but none of them signal the end of capitalism, innovation, or growth. These are short term headwinds, or how I like to call noise. Meanwhile, companies are still making products, selling services, hiring people, innovating. Economies are just adjusting, not collapsing. This isn't a total systemic breakdown, it's a market correction, a temporary imbalance that will eventually correct itself, just like it always does. Markets are a reflection of collective psychology, and right now, people are scared. But that does not mean you should be. The greatest transfers of wealth happen during fear, for those brave enough not to run away. So, what should you actually do in a downturn? Here's a short checklist. Number one, do not panic sell. This is rule number one. Selling in fear is how losses become permanent. Number two, revisit your long term strategy. Are you investing for retirement, financial freedom, a house in 10 years? None of those goals depend on this month's dip. Number three, dollar cost average or DCA. Keep investing on a schedule. You're buying stocks and options at a discount. Think of it as a sale on assets. Number four, build your emergency fund. If you're stressed, it might be because you don't have enough cash on the side if the dip keeps dipping. Secure your foundation. This right here, investors and future investors, is where long-term wealth is built in the times when others are scared, but only if you stay the course. So do not pause your plan, stick to it. Let me tell you a story. The COVID crash, March 2020, the market lost 30% in a matter of weeks, and within months, it came roaring back, setting new all-time highs in 2021. I too was not a seasoned investor, and I made some bad calls, and I learned very quickly that history rewards the patient. Always has, always will. Right now, you're writing your own story, as am I. Will you be the type of investor who sold out in fear, or the one who stayed calm, held strong, and came out better on the other side? I know it's not easy. Watching your portfolio dip, seeing your hard-earned money shrink on the screen, it hurts. My portfolio is bleeding too. But this is the price of being an investor, and the reward is generational wealth, freedom, and security. Remember, the market doesn't reward panic, it rewards patience. You're not investing for this week, you're investing for your future, for your family, and for your freedom. You've got this. Trust your plan, trust the process, and most importantly, trust yourself, because you are stronger than the headlines, and smarter than the fear, and even wiser than the monetary decline. Now, if this video gave you a little bit more confidence to face the market with a calm, cool mind, then give it a thumbs up and share it with someone who needs to hear this. What's your strategy for staying calm in this downturn? Let me know in the comments below. And if you haven't yet, go ahead, like the video, subscribe to the channel. We trade options to make short-term gains from long-term strategies. And until the next time, stay calm, stay focused, and absolutely keep pushing your investments.